So let's talk about those basic adjusting entries you should also be aware of on top of what we already covered, but the concepts will remain the same, so it would be very easy for you to understand what I mean by all of the things I'm about to mention. Okay, so there's another thing that you'll face in adjusting entries. For example, one of them would be supplies. So just to explain, what do we mean by supplies? So supplies in accounting obviously refers to, let's say, stapler, the printing paper, all of these small things that you cannot record individually by their own name because they are very low value assets. So we just call them supplies. So if I say on 5th of January, purchased supplies for $14,000 cash. So if you think logically, if I buy my supplies will increase, right? Like we've learned, anything you buy, it obviously goes up. You have more of it now. And since I paid cash, my cash will decrease. And again, if we apply then our journal entry understanding of the rules, we will know what is debit, what is credit. I'll just write it down. By now, I'll assume you've already done enough practice. So when I do debit credit, you know why I'm doing this. Now what will happen is, by the end of the year, something like this would, some information like this will be available. Let's say by 31st December, office supplies worth $2,000 remained on hand. Means by the end of the year, only $2,000 worth of supplies were still with us, right? Everything else we've already used. So why am I saying that we have to make an adjusting entry for this? Is because we realize by the end of the year, we don't have all of the supplies remaining that we recorded initially. I have to remove some of them that I've used. So obviously, if you buy 14,000, assuming there's no, before this year, any supplies, we didn't have any supplies. So in this year, we bought 14,000 supplies, and at the end of the year, 2,000 are left. That means we can assume we used 12,000 worth of them, right? If you buy 14,000, remaining is 2,000, that means you used 12,000 worth of supplies. So again, let's think logically, since I've used the supplies, my supplies asset will go down. And because I've used the supplies, I have to record a supplies expense. Because whenever we have used an asset like prepaid rent, it becomes a expense. It's no longer our asset. It's no longer something we own. It's something we've already used. It's a cost of running the business. Okay. So here we'll write 31 December. We'll say supplies expense debit. So let me also mention that supplies expense debit, and supplies will be credit. So that's the entry you need to understand for supplies, the adjusting entry for supplies. Now you might say, why did I use like the name supplies? Why didn't you say office supplies? You can do that. Yeah, if you want, use the name office supplies. No one will ever mind, right? So when you're talking about doing for the exam, you shouldn't be worried about if I say supplies, office supplies. General guideline: if your teacher is saying office supplies word, call it office supplies. If your teacher calls it supplies, call it supplies. Doesn't really matter. Both mean the same thing. Your teacher is probably a CPA or obviously an accountant, so it wouldn't really matter. So that's one of the adjusting entries I thought you should know. And another one I will tell you that you should be aware of, which is, for example, there will be something, there's an adjusting entry for inventory shrinkage. Now, just to explain to you what inventory means, I think if I'm not mistaken, we already talked about that, right? Also, just to make sure. Okay, so we haven't talked about inventory. So in this case, yeah, let me explain again here. So inventory basically refers to anything that the business sells. So for example, if I have a business of selling calculators, calculators are inventory for me. If I have a business of selling cars, cars are inventory for me. So inventory is whatever you have a business of selling. So what will happen is, you will be given a value. For example, let's say, first let's do the purchase entry, right? Purchased inventory for $12,000 cash. The normal journal entry for this would be inventory debit and cash credit. Again, we are assuming a situation when there's no beginning inventory, right? At the start of the year, we don't have any inventory from before. And let me also give a date so you see the correct way to do this. So on 1 February, of course, we'll make this entry. However, at the end of the year, you might be given this information. If you record to the adjusted entries, you will be given this information. By 31st December, inventory, let's say worth $4,000 remained in stock. So if you buy inventory worth 12,000, right, and inventory only worth 4,000 remained in stock, what happened? Obviously, we lost the other $8,000 value in our inventory. Assuming we did not sell any inventory, assuming that we just bought it, put it into our, let's say, warehouse, and then at the end of the year we counted, and it was only 4,000 of it was only remaining. So this is called inventory shrinkage. Now the value $4,000 might be because someone stole the inventory, only 4,000 is remaining, or maybe our inventory got damaged, right? And that's why the actual value of inventory went from 12,000 to 4,000. So many reasons why inventory shrinkage can happen, but those are like the normal ones. So obviously, if my inventory value is going down, my inventory account will decrease. I have to decrease it, right? I have to adjust it. And since we lost value, this is a expense. Which expense should I record? Just increase the cost of goods sold expense for this amount. I hope you know why I'm saying 8,000, because you bought 12,000, remaining is 4,000. Assuming we did not sell any inventory, it should have still been 12,000 of it. But maybe someone stole the inventory, or maybe it got damaged and it's worth less money now than we originally bought it for. So inventory. And I would say, yeah, if you understand all of these entries that we have learned, the adjusting entries, the normal journal entry and adjusting entries, you are pretty good. You have a very good foundation here. Now, of course, in accounting, there are vast topics, right? Every topic you learn, for that topic you learn an adjusting entry, a normal entry. So you everything will be far smoother now if you understand these basic ideas. Well, so if we go to our accounting cycle, now we have also covered the adjusting entries. Now, what comes after adjusting entries? Something called the adjusted trial balance. Because if you notice, we already learned the unadjusted trial balance, so now we're learning adjusted trial balance.